We're analyzing Baidu, stock ticker BIDU, to see if Baidu is a great business on sale. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for Baidu. Then we're giving a final rating to the business. Before we get into these valuable metrics, let's understand Baidu's stock performance. Right now, Baidu trades for $143.91 per share. Year to date, Baidu's beating the market. Their stock is up 21%. In the last 5 years, Baidu's down 33%. In the last 10 years, they're up just 2.5%. Going back before the global financial crisis, Baidu's compounded at nearly 17.5% annually. While Baidu's performed well overall, they've had their share of ups and downs in the past decade. Right now, Baidu trades $18 below their 52-week high. The company's up nearly double from its 52-week lows. 1.5% of their shares are sold short. Baidu is a big business. They have a $51 billion market cap. But the burning question is, why should we be paying close attention to Baidu? Baidu is the largest internet search engine in China, with an estimated 84% of share of the search engine market as of September 2021. The firm generated 62% of revenue from online marketed services from its search engine in 2020. Outside its search engine, Baidu is a technology-driven company, and its other major growth initiatives are artificial intelligence, cloud, video streaming services, video recognition technology, and autonomous driving. Now with that understanding, let's get into the numbers. Starting with metric number 1, we want Baidu's average return on capital in the last 5 years to be above 14%. The average business earns 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the business. Baidu's returns on capital have been lackluster in the past 5 years. They earned just 5% returns last year. When these are averaged out, Baidu's earning 4.5% returns on capital in a given year. Those are below the returns of a typical business, well below the benchmark we're looking for. This is an X on metric number 1. Metric number 2, we're looking for 5-year revenue, net income, and free cash flow growth. This metric's all or nothing. All three need to be up. We'll include their last 12 months worth of numbers when we calculate this growth. In this time, Baidu's grown their revenues 22%. Their earnings have declined by half. When we look at their income statement, we can see that this is because they had gains on sale of investments and assets in 2018. If we back those out, Baidu's earnings have actually grown. They've also maintained about the same gross margins and just slightly lower operating margins. Baidu's free cash flows have declined, mainly due to a $1.8 billion change in their other net operating assets. That's something you'd want to dig into, as they've had a few years in a row with multiple billion-dollar changes here. Mainly because their free cash flows are down, this is an X on metric number 2. Metric number 3, we're looking at Baidu from the view of an individual shareholder. We want to see earnings per share growth in the last 5 years. We learned their earnings are down by half over this time. Still, if we back out their investment gains from 2018, their earnings would also be down. Baidu really hasn't diluted shareholders by much. They've only diluted them by less than half a percentage point. Still, they've had this small shareholder dilution and their earnings have declined, meaning their earnings per share are down. This is an X on metric number 3. Can Baidu turn it around in the second half of our analysis? Metric number 4, we're looking for something similar. We want to see free cash flow per share growth in the last 5 years. Same story here. Baidu's free cash flows are down when we include their last 12 months. Plus, with their tiny shareholder dilution, this is another X on metric number 4. So far, we're still looking for our first check. We have 4 X's through 4 metrics. During recessions, it's overly levered businesses that can have the biggest losses. Metric number 5, we want Baidu's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 fiscal years. In this time, Baidu's had negative net debt in all 5 years, meaning they have cash left over on their balance sheet. Baidu's also generated positive free cash flows in all 5 years. Right now, Baidu has $12.8 billion in cash on their balance sheet. They've also generated $14.1 billion of free cash flow. Baidu has a very strong financial position. This is a big check on metric number 5, our first of the day. Now let's see if we can value Baidu. The big metric of them all, metric number 6, we want Baidu's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a fair value for Baidu. Right now, Baidu has a $41 billion enterprise value. This accounts for both their market cap and their net debt position. It looks at the company similar to it being a private business. Baidu's risen a lot since their 52-week lows in October of 2022. Their enterprise at that time was almost equivalent to their last 5 years of free cash flow. It's up 2.5 times since then. In the last 5 years, we learned Baidu produced $14.1 billion of free cash flow, meaning in an average year they produced $2.8 billion of free cash flow. When that's divided by their $41 billion current enterprise value, we get around a 6.75% average free cash flow to enterprise value yield. On a current basis, Baidu produced $3.3 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, it gives us around an 8% current free cash flow to enterprise value yield. Both of these are coming in above the yield of the 10-year treasury. They're above the risk premium we're looking for as well, meaning this is a check on metric number 6. Don't just run out and go buy the business. We still need to estimate their fair value per share and give our final rating. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Baidu, which takes us on to using a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of Baidu's last 3 fiscal years worth of free cash flow, then using historical assumptions to grow these into the future. It's up to you to figure out if these are accurate or not for Baidu. Keep in mind their business hasn't been that predictable in the past. That's always subject to change, but it does impact our assumptions. If Baidu grows their 3-year free cash flows at a rate of just under 2% annually for the next decade, then in the following decade, if these free cash flows are flat, we're adding in Baidu's tangible book value to give an estimate of their net worth. If we want a 15% rate of return, which is what Warren Buffett looks for from his investments, from today's valuations, an estimate of Baidu's fair value per share is around $124. That's down around $20 from their current stock price. It's well within where they've traded in their last 52 weeks, up a lot from their 52-week low. Keep in mind some key points. Baidu's had a low degree of business predictability. That can make our assumptions less accurate. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a minute, we'll give our final rating to Baidu, but we need to address something first. We've covered the numbers, but the qualitative factors may be even more important for Baidu's business. What are they? Looking at the factors supporting a long thesis, number 1, sitting on a pile of cash, Baidu has ample dry powder to invest in technology, particularly AI, as well as merger and acquisition opportunities. Number 2, Baidu is a leader in AI with autonomous driving in terms of number of miles tested and the number of drivers licensed in China. Baidu's AI cloud has also grown significantly with signs of momentum. Number 3, Baidu is strengthening its mobile ecosystem with search, live streaming, and mini programs, helping to create a closed-loop experience for users to acquire information and make transactions. It wouldn't be fair if we didn't cover the negatives of Baidu's business as well. Looking at the factors supporting a short thesis, number 1, Baidu's leadership and brand in search have been weakened by more competitors entering the market, such as Xiaogao, and could be affected by future regulatory risks. Number 2, despite numerous growth initiatives, there is great uncertainty whether any of the new businesses can be successfully monetized on a mass scale. Failure to do so would be a heavy drag on margins. Number 3, Alibaba, Tencent, ByteDance, and Kuaishou and other social media platforms are competing in terms of advertising budgets, which can result in slow growth in revenue for Baidu's search. There you have it for a balanced perspective of some of the qualitative factors of Baidu's business. Now it's time to give our rating. In analyzing Baidu, stock ticker BIDU, we learned their Chinese internet search business has been growing its revenues. They're a leading Chinese company in artificial intelligence, but they earn low returns on capital. Their earnings and their free cash flows are down. Even with those being down, they still have a massive cash position on their balance sheet, and they generate a lot of free cash flow. They have a large percentage of the Chinese search market. They continue to face competitive pressures. It's worth reiterating this analysis is not financial advice. Baidu's free cash flow to enterprise value yields look attractive compared to the yield of the 10-year treasury. When we performed our discounted cash flow analysis, from today's valuation multiples, if these are the same 20 years into the future, if you believe those assumptions and want a 15% rate of return, an estimate of Baidu's fair value per share is around $124. The company traded at those levels as recently as the end of May 2023. When we look at all the factors of our analysis, Baidu looks like a moderate candidate for further research. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about Baidu, and let me know what business to look at next in the comments below. Thanks for learning about Baidu with me, and have a great day.